The latest data indicating a slowdown in the world's second largest economy and the annual cash crunch ahead of the Chinese New Year just around the corner. The People's Bank announced a 100 basis points cut to the required reserve ratio. To discuss the impact of this on Asian equities and the commodity markets, more importantly, let's get in Mark To. He's Managing Director of Asset Management and Head of Research at Fung Financial Services Group. Joins us right now on the phone line from Hong Kong. Mark, good having you. Thanks much for joining in. Do you expect more policy support from China, and could this just be a start of that?
Well, I think what mainland China's authorities is now doing is very important because it has the positive impact upon the market with the expectations that the policymakers are really concerned about the potential economic slowdown, both from the inside internal factors as well as from the outside external factors like the Fed or the Trump, the trade war concern, something like that. So at this moment, the market in general has a very positive impact, and I think that may sustain for a while, maybe for the coming few weeks, because we can see that we are going to have the Chinese New Year not long time soon. So I think the overall sentiment is really improved, especially because the Fed chair actually has some kind of a dovish comments combined with a strong economic data. So it is a very good condition for the market to have some kind of a rebound. But of course, it depends on which sector or which asset class you're talking about. For example, for stock market, it should be good, but for the gold prices, it may not be so. At this moment, it has been reaching the resistance at 1,300 somehow, and get retreated back to 1280, something like that. So at this moment, I think some kind of consolidation around the level should be in place. But of course, if the Fed is going to put a hold on the interest rate hike in 2019, I think the general comment should be rather positive for gold prices.
Okay, Mark, just one quick question before we wrap this up. I think when I was reading the Bloomberg website, a lot of opinion came in about how there will be more such liquidity measures taken by the PBOC in order to offset the impact of the MLF loans during the coming quarters as well. Are we to presume that if that is indeed your view as well, then while there might be consolidation right now, the downtrend in commodity prices might just have gotten broken?
Well, for the Chinese authorities, I think it is really a difficult moment for them to have a large movement in their policies, both fiscal policy and monetary policies, because stability is of paramount importance at this moment. And I don't think that they can have too much or too drastic measures at this moment. Rather, they should build up some kind of a positive impact by the expectations management, which I think they are now exactly what they are now doing. But of course, I don't think that they can inject too much liquidity without the impact on asset prices. They have been very concerned and very careful about this. I think they do keep on it.